Alibaba has just released their earnings this morning, and the share price has plummeted by 9% so far today off the back of this earnings release. We're going to get into some of the reasons behind that, how they actually did, what the perception is going forward, and later we'll get into our own valuation of Alibaba. I happen to own shares of Alibaba. Just because I do doesn't mean it's right for you, but hey, welcome. This is the Fiscal Philosophy YouTube channel. I'm a value investor, and let's get right in. Alibaba is, at its core, a growth business, in my opinion. Now, there may have been a recent period of growth slowdown when it comes to their revenue, but this most recent quarter, which is not yet showing in the historical data feed, is a 9% year-over-year growth. So that tells me that if Baba is down today off of this latest earnings release, it's probably for reasons other than the actual financials of the business. So in the earnings release, some of the first things that show up are the financial results, right? So as I alluded to before, revenue up, operating income also up, and these are not up by small amounts year over year, by the way. 34% there. EBITDA also up 18%. Net income looks like up 19% year over year. Diluted earnings per American depository share looks like that's up 21% year over year. Operating cash flow, increase of 27%. So, it just looks like, they're back to having, some positive momentum going their way. It seems like that sort of slowdown that they had, for a few quarters, seems like that's possibly in the rear view. Of course, over time they may have other periods of slowdown, but this is looking pretty good so far. So where the heck is the problem? I think the main thing spooking investors is probably the U.S. export control expansion, where they're basically restricting the types of computer chips and semiconductor manufacturing equipment that can be exported to China. And Baba is anticipating some problems with this related to their cloud intelligence group, which means that they're actually at least holding off on doing the planned spinoff of that group. One of the big surprises from my perspective here was that Baba actually announced a dividend, $1 per ADS. So American shareholders are going to start collecting a dividend on their Baba shares. So this is a little bit contentious, but I think the big reason for doing that is for optics. There is, of course, a perception among some investors that American shareholders will never see any of the money that comes in as far as Baba's profits and cash flow. So I think by paying shareholders something, that kind of, sort of assuages that. Although share repurchases are more tax efficient, they're not as visible to most investors. And on that topic, they did repurchase $1.7 billion worth of shares throughout the quarter. So one thing is for sure, analysts freaking love Alibaba, okay? Consensus of a strong buy. Granted, maybe some of them will adjust a bit in the coming days after this earnings release, but up until now, strong buy consensus. High forecast for 12-month price forecast of 220, mid 140, low 100. Granted, I think 100 even is a pretty conservative price for Baba. Although 220 might be a little stretched here. But yeah, all in all, I don't necessarily disagree with the analysts on this one, actually. If you're looking at it purely from the financial aspect of the business, I think Alibaba is an amazing company. I understand the fears people have about China, especially with U.S. relations being a little bit tense at the present moment, but this is definitely, if, nothing really, really goes catastrophically wrong, I think this represents one of the best value opportunities in the market, potentially. And we'll get into my own, valuation of Baba momentarily. Before I get into my own valuation of Alibaba, make sure you strike that like button's pressure points, tell it it's already dead, and how many seconds it has left before it explodes. When it comes to valuing Baba, you could use a standard 10% discount rate, assume the 7.5% growth that seems pretty, reasonable, tapering off to, 4% down the line. Now, just coming up with that, you do end up with a fair value that's somewhat, close to that analyst midpoint range. And this, of course, also doesn't take into account the balance sheet, which has a lot of assets on it. Personally, I consider that as maybe part of the margin of safety. There's, sort of this idea that, hey, American shareholders don't actually genuinely have any of the rights to the assets, so don't factor in the balance sheet. It's a little bit of, I'm of two minds of it, because, what are they using to do the buybacks and pay out that new dividend that they've got? Well, that cash comes out of their bank account, and that's cash that's from their balance sheet, right? So do you credit it or not? I think, hey, at the end of the day, since it gives you a more conservative assumption, and you may have worries about China and stuff, okay, don't count it. That's part of your margin of safety. At least you can look at it and say, hey, Alibaba has all of these assets, all this cash, etc. They're probably not going to go bankrupt, at least. At least that isn't one of the risks we're looking at. So the risks are mostly, in my opinion, not based on the financial health of Alibaba. They're more geopolitical, trade war-y, that kind of stuff. So, in addition to that, though, maybe you want more margin of safety, and maybe, hey, for taking that geopolitical risk, you want a higher return. Perfect. Well, is 12.5% high enough? In which case, hey, we're still well below, fair value. If you agree with the 7.5% growth, of course, that's just a number that I think is reasonable. Somebody else may have a different number. But, personally, I think, hey, maybe even 12.5, if we're buying, isn't quite enough. Like, I would probably, and I have in the past, held Baba when it went up past this price, because I do think it's financially worth, quite a lot more. But for buying, I want my entry point to be really nice, because, hey, we are taking a risk. So the reward needs to be worth the risk, right? So we go with a 15% discount rate, and hey, 90 something dollars still we're well below that point. Now, I personally got in, I got assigned my shares at 84, but because of the options premium on it, my actual cost basis is like 79. Now, if my growth assumptions are true, what kind of return would I get at my 79 cost basis, which is actually close to the current stock price, funny enough. So, roughly, what? All right, so between 17.5% and 18%, it looks like, would be my annualized return if my growth assumptions come true about Alibaba. And I don't think 7.5% a year is really all that unreasonable for Baba. There is like a business predictability issue. They have had years that have been, down on earnings and years that have been up on earnings. But I think over a long period of time, if you factor in some of the ups, they'll probably have years where they've got 12, 15% growth in earnings. They may have some that are, zero growth or -2, -3%, something like that. And they'll probably have some in the middle that are, 8%, 6%, whatever. The point is, I think that they stand to benefit from the growth in the Chinese middle class and per capita GDP. And they are, in a lot of ways, the Chinese Amazon. They have a cloud business, and the uncertainty in the cloud business is the reason the market is hitting them a bit today. But all in all, I think over the long run, we won't even really remember why we were so pessimistic about it today. And by we, I mean the colloquial we. I'm personally, feeling pretty good about this one still. My stress level is quite low on this. I think over time, the market will realize that this is an undervalued opportunity, and, investors will at some point feel more comfortable jumping back in. And maybe them returning more and more capital to shareholders through dividends and buybacks is the way that happens. I don't know. But anyway, let me know what you think about a good price for Alibaba, or if you just think, hey, at any price, not worth the risk because China. If you enjoyed me video, drop your comment into Davy Jones' locker, and subscribe to me channel for more, and hit that notification bell, or else I'll make ya walk the plank. Also, join me Discord, link in the description, and become a channel member. Give me all that booty. Arr!